We got a fresh report out for the November retail numbers here in Canada. Bit of a mixed bag. We saw some areas up, some others struggling. At the end of the day, it was just a flat line. That's probably not a very good thing. These numbers, they do matter because they reflect some sluggish consumer spending. That can signal economic uncertainty, of course. It can impact job growth, and it can influence the Bank of Canada's policy decisions on interest rates. So let's take a deeper look at these. In November, the month-over-month growth was, well, there was no growth. It was flat. Came in at 0%. Year over year, sales grew by 1.6%. Again, this is flat from the previous month, that being October here. Now, the biggest loser this month, food and beverage stores. Sales dropped 1.6%, with grocery stores down 1.5%. Liquor stores, they took a pretty big hit, down 2.9%. That's the second month in a row here that booze sales have fallen. So maybe people just stocked up earlier in the year, or maybe they're cutting back. We're hearing a lot more of that as well. Other places that struggle, general merchandise stores. So you think of big box retailers here. Sales were down 1%. Home improvement garden stores down 2.1%. When you strip out gas stations and car dealership out of the equation, things were actually down 1% overall. And this is now the biggest drop that we've seen in 6 months. So let's look at what did well. Well, car sales, they were up 2%. New car dealers led the way, up 2.4%. It's the fourth month now that we've seen an increase there, so it looks like the demand for vehicles is still going pretty strong. Gas stations also saw a 0.7% increase after they had seen 6 straight months of declines. But there's a bit of a catch here. When you adjust for inflation, gas sales actually fell 0.8%. That suggests some higher fuel prices might be behind this increase. Where were people spending money, or where were they not spending money? Retail sales fell in 7 provinces, with Alberta seeing the biggest drop. That was down 1.1%. Then we had New Brunswick down 2%. Ontario went the other way, was up 0.5%, and mostly thanks to, auto sales. That's what led the way there. Toronto saw a 1.1% increase as well. Now, online shopping wasn't much help this time around. It's a bit of a change there. E-commerce sales dropped 1.2%. Still came in at $4.1 billion, but that was a decline there. That means that online shopping made up 6.1% of total retail sales in November, and that's down just a little bit from 6.2% in October. Now, when we look ahead to December, we're hoping that things might pick up there. Stats Canada has an early estimate for December retail sales. They're predicting a 1.6% increase, but there's a catch here as well. That's based on just 48% of the survey responses so far, so that means that the final number probably will change. The main takeaway here: people cut back on groceries, general spending, but they were spending on cars and gas. We've just worked our way through the full holiday season in December, so we'll see if that early estimate actually holds up. What do you think? What are your thoughts? You can drop your thoughts in the comments below. Also, don't forget to like and subscribe for more updates. Now, Amazon has announced that it's cutting 2,000 jobs on its operations in Quebec. The company in this case, they say that the decision comes down to cost savings, and they plan to outsource deliveries to some smaller contractors. In a statement, an Amazon spokesperson said, "Following a recent review of our Quebec operations, we found that returning to a third-party delivery model supported by local small businesses, similar to the one we had until 2020, will enable us to offer the same excellent service and deliver even greater savings to our customers in the long term." Now, the timing of this is a little bit suspect. One of the affected warehouses had recently unionized, and that made it the only Amazon facility in all of Canada with a union. Now, a lot of workers, probably most workers, say they were blindsided by the announcement. Nadeem Saab, he is a supervisor at the unionized Laval warehouse, and he said he saw an emotional scene there. And he said, "What are we going to do? We have to start over. I was a driver, now I am a supervisor, now they're going to erase everything for me." And he personally points to the union and says that Amazon was not happy about the organizing efforts. Now, the union that's representing the workers, it's CSN, they said in a statement, "The decision makes no sense whatsoever, neither from a business point of view nor from an operational point of view. Amazon, one of the most integrated companies between the click of a mouse and home delivery, would entrust all of its warehousing and distribution operators throughout Quebec to a third party." She questions why Amazon, which of course is one of the most efficient delivery companies in the entire planet, she wonders why they would suddenly decide to hand off all of its Quebec operations to a third-party business. Now, some experts do believe that Quebec's strict labor laws played a role. Unlike other regions, Amazon would have been forced into arbitration if a collective agreement wasn't reached. Meanwhile, Amazon is moving on. They're saying that impacted workers will receive up to 14 days of severance pay, but probably for the employees who don't have jobs any longer, that is very little comfort. Now, before I speak of Jamie Dimon and his thoughts on tariffs, I just wanted to point out that it's pretty obvious that your financial future is too important to leave to chance. That's why my son Brandon started the Investing Academy, and this is a company that is dedicated to helping Canadians take control of their investments and build lasting security. Now, Brandon got his start investing way back when he was 10 years old. I know that sounds young, but you did hear that correctly. With the help of an in-trust account, he bought some shares, I believe, of McDonald's and Coca-Cola way back then. He then started working for me at my firm when he was just 20. For me, after I spent more than 25 years as an investment advisor and portfolio manager, I retired, but that didn't last very long. Brandon asked me to join him in his mission to educate Canadians about the stock market. I couldn't resist the chance to share what I'd learned over the years with a whole new generation of investors. Now, to date, together, we've helped over 2,000 beginner investors through the Investing Academy. This is an online program that's designed to make long-term investing simple and accessible. So whether you are just getting started, whether you're looking to build on what you already know, we are here to guide you. You can learn more by visiting our website. I'll put a link in the description of this video. Now, there has been a ton of talks of tariffs in the news lately, and JPMorgan Chase CEO Jamie Dimon, he says that he's not overly worried about tariffs. In fact, he thinks they could be a good thing. He was speaking at the World Economic Forum in Davos, Switzerland, and he sort of brushed off any inflation concerns. And he said, if it's a little inflationary, but it's good for national security, so be it. I mean, get over it. National security trumps a little bit more inflation. Now, he believes that tariffs, if they're used the right way, could protect U.S. interests and push trading partners into better deals. Now, since he took office earlier this week, Trump has been talking very tough on tariffs. He's been targeting a lot of countries, Mexico, Canada, China, the EU. He says, for example, that the EU treats the U.S. unfairly with its $214 billion trade surplus. Now, right now, he's looking at a 10% tariff on China, 25% on Canada and Mexico. Also, the U.S.-Mexico-Canada trade agreement, that's up for renewal or for review, at least in 2026. And Trump says that he's ready to renegotiate that deal that came into effect under his first term. Now, tariffs could go into effect here as early as February 1st. And Dimon didn't comment on the specifics, but he said, I look at tariffs, they're an economic tool, that's it. They're an economic weapon, depending on how you use them, why you use them, stuff like that. Tariffs are inflationary and not inflationary. I'll leave you to figure out what he meant by that. He also mentioned the effect on the currency markets, and he says that tariffs can change the dollar, but the most important thing is growth. Now, interestingly, in light of all the tariff talk, the US dollar has actually slipped a little bit since Trump took power. Also weighing in on this, Goldman Sachs CEO David Solomon, he's keeping an open mind. He said, I think it turns into a rebalancing of certain trade agreements over time. I think that rebalancing can be constructive for the U.S. growth if it's handled right. The question is how quickly, how thoughtfully. Some of this is negotiating tactics for things other than simply trade. So he also believes that tariffs could actually help the U.S. economy if it is done right. He says that this is something that he will be watching very closely in the coming months. Now, I don't want to end on a down note, but I don't have a choice today. Now, in the news, I'm sure you've read it, one of Canada's most divisive candies is coming to an end. And Hershey Canada, they've confirmed that Cherry Blossom, this is that chocolate-covered maraschino cherry treat, will be discontinued nationwide in early 2025. Now, in a statement, a company spokesperson said, after being a cherished treat for Canadians for many years, Hershey Canada confirms that Cherry Blossom will be discontinued across the country in early 2025. To me, this was a Canadian gem. It was originally made back at Montreal's Launay factory back in 1905. And Cherry Blossom has been around for more than a century, but it seems, though, that its time is up. I actually went out this morning to about 10 different places to try and find at least one so I could have it before it was gone, but no luck there. Now, one Montrealer, Stephen Eisenberg, says that he enjoyed them as a kid, but now calls them kind of gooey and stupid. Okay. Another Montrealer, Morgan Thomas, had never tried one before, but took a bite. She wasn't impressed. Apparently, she gave it a hesitant, it's all right, before refusing to finish. Now, I get it that there's always been sort of this love-hate relationship with the candy with Canadians, especially for those of us who kind of grew up in the 70s and 80s when we were still in that phase where we ate a lot of candy. As for me, well, I'm definitely on the side that will miss the candy, but for now, I guess Cherry Blossom is headed for that candy graveyard. That is a wrap for today's video. I hope you enjoyed it. As always, I appreciate you watching. We'll see you in the next video.